Good day, YouTube. This is Jay Money with Falling Forward Financial. Just a article here on 3 stock split stocks you can confidently buy and hold forever. 2 of these I already have, and they are a buy and hold forever. So, but 2 of the 3 stocks have already enacted their respective splits, and I've already talked about them a couple times here. And the other one is split to due to split in July. So these stock splits all have sustainable competitive advantages in their sales, and so among the high profile stocks splitting their shares in 2022, these 3 offer the most attractive long-term growth prospects despite the bear market chatter with pretty much every stock, meme stock fervor garnering their fair shares of headlines. It's a stock split mania that's gripped the attention of investing community in 2022. So some of these had pretty high ticket prices or high prices on the stock, and so therefore they split, make it a little bit more appealing to people and easier to buy some shares. So that probably gave away which ones they actually are, but like I said, I've talked about them a couple times here. But the first one is Alphabet. First stock split, that's the ideal buy and hold forever candidate, is Google, G-O-O-G-L and G-O-O-G. The reason there's 2 of them is because of the last split. Parent company of internet search engine Google and streaming platform for YouTube. So you can just think about all the revenue that they have, all the ads, all the YouTube channels alone. You're watching this on YouTube, there's ads, and Google gets a piece of that, so a big piece, I should say. In February, Alphabet announced plans to enact a 20-for-1 forward stock split, which has since been approved by shareholders. When enacted in mid-July, it'll drop Alphabet's share price to around $118. Relative to its nearly $2,360 closing price, this one was actually at $3,000. I can't remember now. Sometime within the last 6 months this year, maybe back in January. It wasn't too long ago. For the Class A shares in Google, this past week, in turn, the company's outstanding share count will increase by a factor of 20. And here's a chart looking at them over the last month. So you can see they've touched the 2350 mark a couple times, currently around 2240. Market cap, days range of 2236 to 2346, so you get about a $110 swing in there. So if you were trading it, 52-week range of $2,037.69 to $3,030.93. So, and the volume on this one. So, what's made Alphabet such an attractive stock to hang on is its foundational search engine segment. Over the past 2 decades, Google has practically become a monopoly. Data and global stats shows that Google has controlled between 91 and 93% worldwide internet searching in the trailing 24 months. So right there should be a major catalyst to just make you want to hold this one forever. I mean, that's a lot. I mean, that's 7 to 9%. People are using whatever other search engines besides Google, so which is not a lot. So advertisers are well aware that their best chance to get their message in front of users is to market with Google. So there's another catalyst, and Alphabet understands it has an exceptional pricing power thanks to the near monopoly status in internet search. So although ad revenue from internet search offers a fairly sustained low double-digit growth opportunity for Alphabet, it's just one piece of the company's really exciting puzzle. For instance, YouTube is the second most visited social media platform on the planet with 2.56 billion monthly active users. So another catalyst right there. So as you can imagine, this has helped lift ad revenue and subscriptions for YouTube. So next, they also have the cloud infrastructure services segment. Google Cloud is currently the global number 3 cloud service market share, and has consistently grown by 40 to 50% on an annual basis. Again, just another huge catalyst. Cloud infrastructure still looks to be in the early innings, which should provide a long runway of opportunity for parent Alphabet to grow its operating cash flow. And so here's the next one on the list is Dexcom, ticker DXCM, and you can see it. We'll just call that the $78 range. It's been up and down, kind of volatile over the past month. Currently at $74.70, a market cap of $29 billion, days range of 74.48 to 78.72, so about a $4 range in there. 52-week range of 66.89 to 164.86, so you can see those ones down, and the volume on it. So Dexcom is a second stock split that investors can add to their portfolios without any intention of ever selling. Continuous glucose monitoring, or CGM. I've talked about a couple stocks on my channel in regards to CGM. I'll link those in the description as well. The system producer at Dexcom, DXCM. Late March, Dexcom board of directors announced that it had approved a 4-for-1 split, which was subsequently given the green light by shareholders during the company's 2022 annual stockholder meeting in May. On June 10th, the forward split became effective, with shares of Dexcom ending last week below $78 a share. For context, shares were changing hands at a pre-split peak of $659 in November. So there's tons of diabetics. I sell life insurance. There's diabetics all over. It's just the world we live in. Crappy diet, crappy food. So, and some people are just that way. They can't help it. In regards to diabetes, I have kind of a soft spot for diabetics, and used to work with them. And the beauty of healthcare stocks is that they're incredibly defensive. No matter how well or poorly the U.S. economy and stock market perform, people are always going to require prescription drugs, medical devices, and healthcare services. Just because Wall Street or the U.S. economy runs into a rough patch, it doesn't mean people stop getting sick. This provides a level of demand safety that most other sectors and industries can't match. To add to the stability, Dexcom is helping combat a disease that continues to worsen as time passes. The latest statistics from the Center of Disease Control and Prevention shows that 37.3 million Americans have diabetes, 8.6 million of which are undiagnosed. Furthermore, 96 million U.S. adults are estimated to have pre-diabetes and can lead to diabetes if left untreated. It's nearly half, so half of the adult population in the United States with diabetes or pre-diabetes, and it's a mammoth opportunity for Dexcom CGM system. So a huge catalyst right there for this one. So I'm definitely going to be watching this one a little bit closer, and since it's down. So what's more, Dexcom has built a high margin razor and blades operating model. Diabetic patients purchase the hardware, the razor. They'll use the read their blood glucose levels and buy high margin replacement sensors, the blades that monitor and transmit blood sugar levels to hardware devices, and the perfect setup to realize operating margin expansion over time. So next, you guessed it, you might have somebody knocking on your door right now getting an Amazon package, who knows. So Next is Amazon. I've talked about them a couple times here lately. Bought some more shares since the split. I had shares prior to the split. So third and final stock is Amazon, another FANG, AMZN. In March, Amazon made the announcement that it would split and ride Alphabet's coattails to enact a 20-for-1 split. On June 6th, this split went into effect. The company with those shares traded north of $3,700 range as recently as November. Wish it would have sold back then. Closed this past week at a split adjusted of $116.46. And currently, it's not even 116, it's 109.65, so just under $110 you can get a piece of Amazon. Before, you would have to buy this on Schwab does slices, M1 Finance does slices, Robinhood still does. There's probably other platforms out there that does slices, or some call them partial shares. So here's a look at their chart over the last month. Currently at 107.40. You can see where it hit 125 and dove down to probably 102, 103. I bought a couple shares right in there, hit that dip. That was pretty nice. There's their market cap, days range of $107.04 to 114. So now would be a good price to even trade this one. So again, I don't give tax, legal, or trading advice, just state my opinion. And average volume on this one, and there's the volume. That doesn't make any sense. There's quite a difference, but however, the real value of the online marketplace isn't found in the aggregate retail sales. Rather, it's the 200 million Prime subscribers Amazon has signed up globally. The annual fees collected from Prime members provide tens of billions of dollars. So just the Prime subscription provides tens of billions of dollars in revenue for a company's logistics network and allows Amazon to undercut brick-and-mortar competitors on price. What investors might not realize about Amazon is that its ancillary sales channels are what drive the bulk of its operating cash flow. I talked about that a while back, and their cloud service as well. So even if online retail sales soften, high margin sales channels such as advertising, subscription services, and cloud services are capable of fueling virtually all of the company's profit and cash flow growth. So kind of amazing. Speaking of cloud services, the AWS is a global kingpin. It accounts for a third of the worldwide cloud infrastructure spending, according to estimates from Canalys, and has been growing sales of north of 30% on an annual basis. And from what I remember from the last article that I talked about, I think that's about 74% of their income, so it's huge. So throughout the 2010s, Wall Street and investors willingly paid a multiple of 23 to 27 times Amazon's year and operating cash flow to own the stock, but thanks to AWS Prime and advertising, Amazon's operating cash flow could more than double mid-decade, which would drop its operating cash flow multiple to about 9. And that would be a bargain for the company, as many competitive advantages as Amazon. So that's the 3 on the list. I already have 2. The Amazon, definitely going to be watching this one, Dexcom, especially at that price. And so, I mean, there's always going to be a need for that. And, of course, Google. So 3 long-term holds. I could see holding those for 20, 30 years. I'm probably 20, 25 years from retiring, and I wouldn't have any problem holding all 3 of those. So they're both 3 powerhouse stocks. So, but you can list in the comments which ones you have and what your cost basis is. That'd be interesting to know. and hopefully Google doesn't run up too much more before the split. And if you're waiting to buy Google, you can list that in the comments as well. If there's any other stocks out there you want me to take a look at and make a video, I'd be happy to do that as well. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.